Welcome to the Mortgage Loan Officer Podcast, brought to you by the Mortgage Marketing Animals. I'm your host, Frank Gray, here with Megan Pavoni. What's going
Hello.
on? Hey, so that's Italian, right?
Sure.
You,
Yeah, it
you
is.
speak a
I'm
lot of
not, but
Italian, right?
oh yeah, just tons. Ciao.
Ciao. Good one. Yeah.
Mhm.
So, hey, I wanted to get Megan on the podcast. For those of you that visit us at Breakfast Club, you've seen her a couple times. We've sent out emails, etc. And I don't know how I stumbled. How did we meet? I don't even know.
You were referred to me by somebody.
Oh, right. Yeah. So I was looking for a business line of credit
Hmm.
that and was a particular business type or something. And
Hmm.
I reached out on a forum that I'm a part of, and somebody said, talk to Megan. So
Hmm.
that's how we connected. Right.
Yeah.
So, and then I discovered that not only do you do business loans and business lines of credit, but you pay 8 flipping points for them if they close. And then suddenly we became best friends.
Exactly. We're like two little peas in a pod.
Exactly. It's like 8 points. You're my
Yeah.
best pal in the whole world, you know? So I figured we should do a podcast because we can kind of go through this in a little more detail for everybody. Like,
Hmm.
you know, the company, the type of loans that you do, who's the ideal customer, let's super clarify. These are unsecured loans. They are not loans against commercial real estate. I think we'll try to say that at least 17 more times through this
Yep.
episode so that people might actually hear it one of those 17 times that these are not lines of credit like a HELOC that you put on your house. That is not what this is. You're not putting lines of credit on a commercial building or
No.
a retail strip mall or anything like that. These are unsecured loans purely against the business itself.
Correct.
I got it down.
I know you do. And congratulations.
Hey, if I can get it, others can get it because,
Yeah.
not too
Well,
easy.
no, Frank, you're very smart. You know
Uh-huh.
what you're doing. You found me. So
Right, right. So yeah, give us a lowdown, Megan. Like, what's the deal with the company? What kind of deals do you do? Who's the ideal customer? And how do people get signed up to get 8 points if you close a deal for them?
So ARF, people will ask, when did you start? What did you do? Like, what's your specialty?
Hmm.
So ARF stands for Advanced Restaurant Finance. So
Ah,
back in the day, 2001, when we originated, all we did, which is very weird in the banking world, is restaurant loans, hospitality-based lending. That's
okay,
exactly all that we did. That is still to this day what we know best, our wheelhouse or
hmm,
whatnot.
okay.
So
So let me
then,
let me just stop
yeah,
right there. So
yeah,
so right off the bat, it's like, okay, this is the super niche for you guys, the super duper niche. It's not
yes,
all you do, but the super niche restaurants, hospitality.
yes, bars, bakeries, breweries, lounges, hotels, motels.
Okay.
But don't get confused with like, because I did have this question speaking of real estate. So in the mortgage world, there might be like, you might VRBO, your home or a
Mhm.
rental property. I can't touch those. Anything that's
Mhm.
like residential based, not
Mhm.
going to happen.
No.
But no co-ops. That's
Got it.
just had to be clear
Okay.
about that. Yeah.
Yeah. Okay. So yeah. So keep going. So
Yeah.
tell us a story.
So 2001, we came out, we did restaurant loans. We didn't do any lines of credit. They were just like mezzanine. And then we had a flex pay loan, which we were the only one in the marketplace where we were considered a niche lender that offered, we weren't a hard money or a merchant cash advance lender, and we weren't a bank lender. We were right in between the two. So we
Mm,
had, higher rates, but we had flexible payback options. So we would
mm,
like defer some principal. You'd pay, majority principal and interest on every payment, but half of your principal was deferred. So it
mm,
made your payments less. So people
mm.
really liked us, went on for years. COVID happens.
Ah,
When COVID happened, obviously the restaurant industry was hit the hardest.
torpedoed.
So
Right.
yeah, it was really brutal and very, very sad. I'm in Chicago. I saw a lot of really good friends
Yeah.
lose their businesses.
Yeah.
And
Terrible.
in it, we were very good with all of our clients. We basically deferred everything. We worked things out. We did like flexible payment options just until people got back on their feet. And it
Yeah.
took 2 to 3 years for that to happen. But when that happened, in order for our company to start lending again, we had to expand.
Mm.
So we created this referral program that we'd already had in place, but it became more of a loan broker based program. So
Got it.
anybody that's in like the lending space that, is looking for homes for their clients.
Hmm.
And we started to dabble with primarily loan brokers, people that were just looking for any type of working capital for their clients,
Sure.
not mortgage brokers per se, but that's now like where we've landed, but
Yeah.
that's where we started. So
Right.
we have this huge referral program, and we started to do what we call expanded portfolio. So all these different industry types. So we do medical supplies, medical facilities, dentists, doctors, veterinarians. We'll do manufacturing, we'll do food distribution, grocery stores, liquor stores, other retail. You name it, we most likely do it. But then there's the ones we don't.
Yeah.
So
Let's nail those down. What are
let's nail
the
those down
don't
because
even bother? Yeah. What is that?
this saves everybody time if we
Right.
can wrap our brains around this. And I still fight this pretty much every once an hour, probably
Mm.
right now.
Okay.
Um, we will never do anything that has anything to do with construction.
Okay.
Let me be clear. No flooring, no fences, no tile, no windows, no cabinets, no home flippers, no concrete companies, no um, real estate offices, anything that's connected to that like construction, residential
Yeah.
sphere, not us. There's no negotiations. I don't care if they have 800 credit. We just
What,
don't do it.
what's the
It's
big
just,
fat problem with that?
I don't
What is
know.
it?
You tell me, Frank. It's every day, multiple times a day.
I can get it. It's such a volatile industry, and
But there's
I
people
could
that
kind of
do that.
see it.
Yeah, it's
Yeah.
just not us. So we have the
And
way
there are
we
people that do that. You're right. There's
there
companies that
are
will do it.
plenty of
Yeah.
people that do that. It's just if you're looking for, and maybe this will help. We specialize in 100,000 to 450 for like our average loan size. We can do less and we can do more, but I'd say that's our 100 to 450,000
Yeah.
realistically. Okay. And the max we go out is 3 years. So
Mm.
how would a property, like if you're, a real estate office and you're looking for, X amount of dollars, but your sales are going like this,
Right.
why would we take that on? Because it's not going to work for either party.
Right.
So
Yeah.
that's why we don't. So we don't do real estate.
Yeah.
We don't do trucking. That's a huge one. And
Mm.
um, I used to work at Bank of America. They love trucking. Go there.
Mm.
Go to Bank of America. They
Yeah.
love the
Okay.
trucking industry. And they have a good unsecured product for them.
Mm. Yeah.
We just don't do it. And then unfortunately, no cannabis,
Hmm.
which you and I have talked about. But
Right.
those are the three biggest that I see that we
Yeah.
just can't do.
Mhm.
So
But okay, there's those three areas, but there's a whole lot of areas that aren't those three. So
correct.
there's a
Yeah,
lot of opportunity out there.
a lot. A
And that's
lot.
why I wanted to bring you to the Breakfast Club and the animals community because it's like, we work with as mortgage people, we work with self-employed people all the time that have
Mhm.
all kinds of different businesses that they run, right?
Yeah.
And so, and a lot of times they might be looking for some working capital, business line of credit, that kind of a thing. And it's neat to have someone like you in our pocket, that we can say, "Hey, I got you covered," right? We need some help.
Yeah,
Talk to Megan. So to well, let's save the best for last, the 8 points and how that works, right? But
of course.
so if they want to, if they go, okay, this sounds cool. So they have to get signed up, right? We've got
Mhm.
to sign some paperwork saying, okay, I'm officially connected to ARF and to
ARF.
Megan, right?
Yeah.
Yeah. And the way that they do that is, of course, we'll give them a way to contact you.
Mhm.
But they basically just have to contact you and then you will send them the appropriate sign up paperwork.
So what's been happening is obviously yesterday and the time before, I get flooded with inquiries to get more information.
Hmm.
What I've been doing is I send out to everybody the information packet, like how the program works,
Mm.
industries we don't, work with,
Mm.
just like the meat and potatoes.
Yeah.
Then from there, I highlight at the very top of that email, if you
Mm.
want to be signed up, you need to contact me and I will send you a DocuSign.
Right.
That way, nothing gets buried. We're not wasting anybody's
Hmm.
time and everything's good. So
Hmm.
from those emails that I sent yesterday, I've had a lot that have said, please send me info, please send me info, please send me info. So from there, I just send them a DocuSign.
Mm,
They either sign up personally. So that was a big question yesterday.
mm,
Do they have to be attached to their company, or is this something they can do on the side?
mm,
You could do either way. If you want
mm.
it attached to your social, then it's going to be on the personal side. If you want it attached to the business, it's going to be the EIN and it's
Mm.
going to be a business DocuSign.
Yeah, and
That's
let me just
yeah.
help people understand this. So understand this, guys, because I know you're everyone who's listening to this or watching this is probably a residential mortgage loan officer, right?
Mhm.
Guys, this has nothing to do with residential mortgages. Nothing.
Nothing. Nothing.
Nothing at
It will
all.
not impact or hurt your business. It will actually help your clients.
Yeah,
Yeah.
it's you're not in any way, there's no licensing requirement you have to do. It doesn't
No,
matter what state this gets done. It has nothing to do with residential mortgages whatsoever. It has
nothing.
nothing to do with RESPA, nothing to do with real estate, nothing to do with housing,
Hmm.
nothing. So, yes, you can sign up on your own using your social. Or if you happen to have an LLC that you run, a lot of loan
Hmm.
officers have their own LLCs for
Hmm.
various reasons. Or
Let's do
LLC
that.
or corporation, you could sign up with your LLC. You could sign up with your corporation, whatever you'd like to do. Or if the brokerage or the company says, hey, let's do this and we'll
Mhm.
sign up and then participate in it in some way, you could do that too. So it's
Exactly.
really anything you want to do, but you need to understand you are not violating any laws or rules or anything whatsoever. It has nothing to do with residential real estate,
Nothing.
residential mortgage, nothing. Okay. Different planets, different universe,
Hmm.
doesn't connect in any way. So you're safe to sign up.
And then let me piggyback off that really quick, just a little tangent. I know a lot of times somebody will say, hey, I'm going to have this client, but he's in the middle of refinancing his house, blah, 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 blah.
Mm,
Guess what? It has nothing to do with them refinancing their house.
mm,
Yes, we do a credit authorization. We
mm,
don't do an inquiry or a pull, and we don't put it against any, it does not interfere with
mm.
anything that they're
Good to know.
doing
Okay.
with a home or residential
Mm,
refinance, HELOC, anything.
mm,
Nothing to
mm.
do with it. Completely separate.
Wonderful. Okay.
Yeah.
Good to know. Okay.
So
Hey there, if you're loving the tips so far, make sure to hit that subscribe button and then click on the bell as well so you never miss out on more cool free tips coming your way. And also, would love to hear from you. Leave a comment down below. Let me know what you think or what you want to see next.
yeah.
All righty. So I think we've got a lot of that done.
Hmm.
All right, let's get to the juicy part. Eight
Oh yeah.
points. What the heck? How does that even work? It's just insane.
So 3 years ago now, 2 or 3 years ago, I think it was. Yeah. We took our entire marketing budget and basically gave it to our partners. That's
Okay.
what we said. We're going to just package it all together and we are going to offer them the Lone Stars program. And so anytime anybody sends us a deal, and let's talk about that in a second, like what do they send? Because that's important.
Ah,
So they
yes.
send us a deal, how they pass it off. We'll talk about that. But they send me the deal. I work with their client. In 5 to 7 business days, they get a decision. Let's say they're approved. Yay. And if they're approved within the next month, depending on when it closes, you'll get paid 4% upfront, no matter what, no matter
Mm-hmm.
the loan amount. My average loan size is usually 100K, sometimes more. So you're looking at around at least 4 grand in your
Mm-hmm.
pocket
Mm-hmm.
just by getting them over to me and them getting done. And then the other 4% for a total of eight, you will get residually every month for the next 12 months that line or loan is still open.
That is so.
So,
And the reason that you do that is for something called clawbacks or
correct.
whatever. It's just
Yeah.
you
So
get
we
some
never
money
have
up
to take their
front,
money away.
but in case this deal gets paid off or something or
Mhm.
whatever, however it works on the back end,
Even if it goes bad. Yeah.
yeah, or goes bad. Right. Yeah,
Hmm.
yeah. So then you won't get paid on that. Gosh, something hit me there and I just lost my train of thought. Too bad. Oh well. Yeah, but yeah, this is remarkable. So yeah, so what do they have to give you to get things started?
There's two ways to do it. So I will send an email after they get signed up that says, hey, so let's start making money together. You can either submit the attached application. So I'll provide an application and the last 3 months of bank statements for your client to get the ball rolling. And then
Business bank statements,
business bank statements. I don't care about
not
the
their
personal
personal bank statements. Their
business.
business. This is a business loan, so they must
Correct.
have a business and a separate business bank account, and we
That
have to
shows
get
sales.
Right. And we send her the last 3 months of those.
Right.
So that's one way. So
That's one
the
way.
participating loan officer could send the borrower the application to fill out, and
Mhm.
then they ship it to
Yep.
you with the 3 months bank statements.
Correct.
Can they just send you a name and a number, or
That's
no?
the second way. So the other way, and sometimes they want to do this first, which is totally fine. They want to put me on a group text or a
Yes.
group email with the
Yes.
client
Yes.
saying so that we all know that we're going to communicate with each other.
Yeah.
And then from there, often the client might fill out the app
Mm-hmm.
or, send it over and then we just, we all start talking and then it's handed over. So it doesn't
Right.
really matter. I mean, or they might not want to gather the information for the app and just say, "Hey, he's expecting your call. Call him." Fine, no
That's my
problem.
favorite way. Yeah.
Fine.
Yeah.
Yep.
And guys, you'll find that these businesses, you say, I have a partner who can help you. Her name is Megan Pavoni.
Mhm.
They do great stuff. I'm just going to connect you on a three-way text. She'll start talking to you. She's going to send you really, and the application is ridiculously small and simple. Just so you know,
Mhm.
guys, it's like a ridiculously easy app. A
Mhm.
ridiculously easy app. You're going to send her a few months bank statement. She'll figure out what you can do. Now, here's the thing that I remembered. My train of thought came back.
Mhm.
Guys, listen. I don't even know what the rates are on these things. I don't even care, and you shouldn't care either. I tell you, if I'm asked, well, what's the rate on it? My answer is, I don't know. Talk to Megan.
Mhm.
And that's what I do because it's a bit of a complex product, right? The way that
Right.
it's structured and the way that it can be used and deployed. So, and borrowed against and paid back. And so depending on how all that gets done, it could be a very low rate depending on how they make use of it. And Megan is the expert at explaining this to people so they understand it. She has a client of mine she's working with right now who was just hyper rate sensitive,
Mhm.
right? I said, I don't know what it is. I don't know, but I kind of did a little. Megan told me kind of where it
Mhm.
was, and I thought, I don't know if he's ever going to go for this.
Mhm.
He's in the pipeline. He's in the
Yeah.
pipeline. She managed to. She knows how to explain it properly. So I
Because
would just say
Frank,
is
the biggest problem with rate is people's expectations are not realistic,
right.
especially in this day and age. And
Mm,
they're thinking mortgage,
mm-hmm.
most even homeowners like myself, like, oh, it's double digit. There's no collateral.
It's
So what?
unsecured.
Right. So you'd rather have a credit card, you're paying even more.
Right.
I mean, to me, it's just bananas that,
Yeah.
oh, I can't pay that. I say, look at the dollars. You're not even really paying that much dollar wise.
Yeah.
Like it's just a number. I mean,
Yeah.
it really is. And with Google and AI and everything, you Google what's the going rate for a business, credit line for my business, and it comes up and it's a crazy range. It's anywhere
Mm,
from 9%
mm-hmm.
to 51% because I
Yeah.
checked yesterday and I'm like, I'm not 9 and I'm not 51. I'm like, somewhere over here, like
Yeah.
it's crazy to me, but like people don't they think, "Oh, I can do better." And I'm like, "You know what? Call your bank, see what they
Mm-hmm.
can do, but
Mm,
you can do better single digit rate wise. And
mm,
sometimes even then it's higher because of fees and whatnot.
mm-hmm.
But you have to go using property. Do you own your business land? I mean,
Mm.
sure, go for it. Like that's
Yeah.
the cheapest route, but
Right.
9 out of 10 times they don't.
Right.
So,
They're a business. They don't own the property
correct.
they're running their business out of. They're a restaurant leasing the space,
Yeah.
et cetera, et cetera, et cetera. But they have a business. That's a good business. And they make good
Yep.
money and they've got good bank statements and they need some working capital to,
Correct.
get some inventory in, ahead of time, then sell it out or whatever,
Mhm.
or payrolls and all this kind of stuff. And people just need it. Businesses need
Right.
it. And yeah, so I don't even broach the rate conversation. And why would I? This is not my world. I think a lot of us in the mortgage space, we're just so used to being so in control of
Mhm.
everything in our files. We have top producer syndrome like big time in the mortgage space. Where it's like they can't let go of anything. And we have clients that we have relationships with. We care and we don't want anything. But I
Mhm.
just got to tell you guys, just in this is a different world. It's not your world. They're Megan and her company. They're fantastic. They do a lot of business. If you afford her the opportunity to have the conversation with the business owner, it's gonna be just fine,
I'll
just
take good
fine.
care of them, I promise.
Yeah, yeah. So just because it's not your world, and the best way to handle this is, I don't know. I really don't know how those work. They're not my world. But I know she's good, and just have a conversation with her. If it sounds right, then do it.
Mhm.
And that's all you got to do. And there's 8 points in it for you.
lots of money.
It's awesome money. It's ridiculously cool. So yeah, I know I've had a couple of after you came on the first time or whatever, I had two or three calls which like, dude, I'm gonna do this. This is all I'm gonna do. I'm gonna focus on this. I'm gonna market this. And I was like, good, go for it. Do your thing.
Yeah.
And you can. This is a very viable, revenue source for us. You know what I mean?
Yeah.
Very viable. So anyways, cool, man. Well, just want to make sure. Oh, the best way to reach. So what you want to do is if you're just listening, if you're on Spotify or iTunes or something like that, just hearing us, the way to get started is just go to workwitharf.com.
Mhm.
Workwitharf.com. If you're watching us on YouTube or something like that, then in the description, we'll have the link, workwitharf.com. Or if you're watching us or listening on the Loan Officer Podcast Network through Marketing Animals, it'll be in the description down there, the link, workwitharf.com. When you get there, guys, a very short little form, just your name, phone number, email, whatever. And then there's two buttons. Okay. One says, I just want information. The other one says, I think I got a deal. And I put the I think in there because most of the time we think we have a deal. A lot of times we don't because we're still thinking the wrong way. But if you think you got a deal, click the button that says I got a deal. And if you click that button, Megan gets notified right away. She'll call you right away. She'll reach out to you. But if you just click the hey, I just want more information, you'll get an email sent out to you with a nice info sheet and ways to reach Megan directly. Phone or whatever the case may be. So, anything else, Megan? Did we cover it pretty good?
I think we did a really nice job. I mean, I can't really think of anything that's really too pressing that we
Mm,
didn't talk about. But
yeah.
oh, another thing about money, because everybody
Mm,
likes to talk about making money.
yeah.
We do milestone bonuses. So
Mm,
I totally forgot about this. And I had a referral partner, a broker partner that funded a $300,000 loan
mm,
yesterday.
yeah.
And I forgot that it exceeded 250 for her fundings for the year.
Mm.
So she gets on top of her $12,000 she's getting for the 4 points up front. She's getting an additional $1,250 bonus just for exceeding 250 for the
Y'all
year.
do bonuses for us too?
I forgot to mention that. Yes.
Dang. You guys are so cool. I'm so happy I met you. I really am.
Same.
So I can't remember who referred me to you, but I want to thank him or her. I don't know who it was.
It's
Because
really
this has
worked
been
out
such a
nicely.
cool relationship. Yeah, and it's
Yeah.
just such a good thing to know about. It's such a handy tool for a mortgage person to be
Mhm.
able to offer their clients. And if you're creative and you're innovative and you're an entrepreneur and you feel like, hey, I could market this and just do this on the
Oh,
side or whatever, you certainly could. You
I know what I was
certainly
going to
could.
say.
What?
So, as someone that's done mortgages and that's married to an LO,
Mm-hmm.
what he did and his company has done when they're trying to search for leads quickly, like
Yeah.
to try to make money on the side, they
Yeah.
go through their current portfolio and
Yeah.
just filter everything to search business owner. From
Mm.
that list, then it
Uh,
narrows it down to like whatever. And then
mm,
they go through those people and see if the industry types work.
mm.
So that's how you do it.
That's
It's
how
a
you
quick,
do it.
easy way. Yep.
For those of you that have databases of 2 or 3 thousand people, there's money in it.
Mm-hmm.
There's money in there.
Look for business
There
owners.
you got business owners. They fit
Hmm.
the mold. They fit the box, and they probably need some working capital. So there you go.
Yep.
All right, Megan. Thanks so much for being here on the Mortgage Loan Officer Podcast. Really appreciate it.
Thanks, Frank. It's been a pleasure.
And you guys show up at Loan Officer Breakfast Club. Just go to breakfastclubzoom.com. That's every Monday through Friday, 8:30 a.m. to 9 a.m. Eastern Time. Megan is there, and she'll show up once in a while. We'll have her speak as usual. And there's a lot of other good stuff that goes on there. So you guys show up, and we'll see you then. Thanks for joining us here. Megan, adios. Until the rest of you, we'll catch you here next time. Mortgage Loan Officer
Ciao.
Podcast. Ciao. Bye.
Bye.